And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, Wednesday, November the 30th, last day of November. Tomorrow, December 1st. Tomorrow, December 1st. Hard to believe it's the 12th month of the year already. This year absolutely flew by. If you are in the markets already, hopefully things are going your way. My name is John. Thanks for trusting me with your time. As always, our focus is context, risk management, and patience. Oodles, that's an industry term, oodles of economic numbers due out today. This morning already, mortgage rate dropped a little bit. It was 6.67% last week, 6.49% this week. Good for you if you're trying to buy a house. 7:15, the ADP employment number came out. They were looking for a 200,000 increase in jobs, came out 127, a pretty big miss in regards to that. The GDP number came out today. They were looking for 2.7, came out 2.9. The economy expanding a little bit more than they were expecting. The trade balance came out considerably lower than expected. 7:50, we have a Fed speaker. Bowman is due to speak. 8:45, we have Chicago PMI. 9 o'clock, job opens and labor turnover survey and pending home sales. 9:30, of course, the EIA petroleum status report. 11:35, Fed member Cook is due to speak. 12:30, the Fed chair Powell is due to speak. And at 1 o'clock, the Beige Book is due out. So we have lots of things to be looking at and focusing on throughout the trading day. It's going to, I think, incite a little bit of overexcitement as far as getting into some trades today. I'm going to try and remember and remain patient and understand that I'm not going to catch every move. I'm probably going to miss a couple of them, and I'm going to be patient and wait for the ones that really speak to me. As far as everything else is concerned, looks like we've got stocks remaining sharply steady this morning prior to the rest of the deluge of data. Crude prices rose overnight on Chinese demand. Also, OPEC Plus is likely to leave production unchanged at its December meeting. Hints of a cut in production yesterday and the day before. Lots of rumors flying around with that regard, but apparently we've settled today so far on unlikely to change production in the near future. The Eurozone CPI came out lower than expected today, indicating a potential slowing of inflation in Europe. I mean, it's still high, but a little bit lower than they were expecting. VIX this morning was up a little bit after the numbers came out, 22.14, still not a big number. Dollar index off a little bit at 106.33, and the yield on the 10-year is a little bit higher this morning, but exactly where it was this time yesterday, 3.75%. As always, please feel free to hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Recap everything we do. Subscribe to our YouTube channel. You get notified when we do go live. I apologize for all of you that if you were at the recap yesterday, I had lots of gremlins, some switching problems, and then I lost internet altogether. It just ended abruptly, and we didn't really get a lot done. So again, I apologize if you were there yesterday. Things out of my control just kind of took me out of the recap last night. We'll hope for a much smoother day today. We do have group coaching. We have Make Hogue Money at 2 o'clock. We have the recap after that. So busy afternoon for us. Thanks again for all of you who joined me for Make Hogue Money yesterday. And we are looking forward to what we're seeing today. As always, I got to check in with everybody this morning. Scott saw and he conquered, first in the room. You win the prize, the free oven mitt, as my brother Tom said yesterday. Good morning, the Rooster, already crowing. Nastic, Caprice 101, Shaw Cunningham, Orion, Brody, Terry King. Good morning. Sunny with a quote for this morning. I like this quote. Do what you can with what you have where you are. Teddy Roosevelt. Glitter Sandwich, good morning. Caesar, Bill, Alejandro, Danny, George, Lacey. George says good morning. He always says good morning to you. Good morning, my brother Rick. Love you. Jules, Vince, good morning. Dr. VJ, Khalid, Rob T, Marcelo, Three Lions Insight, HPAC Support. Anissa, DA, David, Dark Heaven, good morning. Let's go traders. JD Royalty, let's have a powerful day. My email, jhoagland, JHOAGLAND at topstep.com. Haggle Matters, good morning. Trading Research, Dimitar, Mike H, Randall, Serenity Trader, good morning. JM from Paris. Well, ho. I have no idea how to speak French. Good morning. Let's stick to the system. That's good advice, Razmik. Rusty Golfer, my spirit animal, and Sarah Hall. Prayers and love to you as well. So, well, we've got Richard Walsh saying buenos dias. Zorain, good morning. All right, so we are going to jump into the charts. We're going to take a look at what we see. We still have lots of data due out. Some of it maybe not as impactful as possibly the GDP might have been, but that GDP, again, is kind of a second estimate for what the actual third quarter GDP was. It's a preliminary number, and it's the second preliminary number, so we really still kind of fishing out and feeling what happened in the third quarter. It's a good thing that that it's higher. It's not a retraction. Maybe we'll be able to avoid somewhat of a recession. However, the yield curve hasn't been this steep in 40 years. Ronald Reagan. When he became president, it was very similar to where it is now, as far as the yield curve is concerned. He inherited the yield curve, kind of fixed it up over the next 8 years. I'm hoping we're going to be able to do the same. Let's go ahead and jump into the charts. I've got the daily in the S&Ps all queued up for us. Let's take a look. All right, we've got the charts up. So, upside medium time frame structure remains. What I'm calling medium time frame structure is off this big excess low here on the 13th of October. We've been putting in higher highs. We've been putting in higher lows. And we're at kind of a critical point here, I would say. Whenever we have a convergence of a trend line and a weekly kickoff level in play on that day, which that could be today, it might be a relatively impactful day. So we're going to have to watch and see what happens today, of course. We're going to try and make money on what happens today. The short time frame balance that we are in has, in the S&Ps, been holding at the lower extreme. We've got weekly kickoff low, we've got last week's low, and in this zone here, I'm looking at that as the lower extreme of the area of balance that we are still remaining in. Again, today, tomorrow, critical spot here when we see these convergences between some longer time frame trend lines and a weekly kickoff level. Yesterday, we waltzed right down below weekly kickoff low, but we could not stay there. So we're seeing a degree of excess on the daily chart below weekly kickoff low. Lots of data yet to come out today, of course, and as we all know, anything can happen. Anything can and will happen. So We added 1,200 in open interest yesterday on an attempted push to the downside. I don't view that as a very powerful addition to open interest to the short side. Here's where we are on the 30. That's the wrong 30. So we had some overnight inventory to the long side. The market is obviously responding possibly to the GDP number and negatively. Why would that be? A positive GDP and a higher GDP than expected, I'm thinking, might incite the Fed to increase rates at a higher rate or at a bigger number, maybe even in December. So we'll watch what the talking heads have to say on TV. While a good GDP would normally be something we would respond higher to, I think the fear is if the economy isn't slowing down fast enough, the Fed may do things to slow it down. I think they're going to be pleased with the ADP number. They're looking for lower employment, of course, and that's kind of not nice, but it's what it takes to straighten out inflation. So we've got overnight inventory adjusted back to the downside. We are in range. We are in value. I am going to suggest that the fact that we've come back into range, back into value, gives us the opportunity to look for our trade locations, to look for opportunities as the day goes on. When we open in range and in value, there's a higher probability that the best trade location may come after the first hour. One extreme of the initial balance is likely to remain one of the extremes, of course, but it gives us the opportunity to just sit back, look for good trade locations, and see if we can't limit our risk on those good trade locations. Of course, weekly kickoff low might still be impactful for us today for an opportunity for an execution. Our overnight low is relatively close to that, so this whole range down here looks like there may be some fish down there. If we get down there, I'll probably throw in a line, and if I lose a couple of worms, I'm okay with that. Okay, I want to catch the big walleye. I'm okay losing a couple of worms. Take a look at crude oil now. Crude has had a pretty decent upside move this morning. So we've got a W bottom, a V bottom, quite possibly. Buyers exhibited the fact that they like price down at this level for the last couple of sessions. We added 5,400 in open interest on this up move on just okay volume, not tremendous, but this open interest addition yesterday indicates new buyers, new long bets coming into the marketplace. We're seeing now those buyers continuing in the overnight and into the regular trading hours session today. We have technical support right down here. We've been expecting that. Now we're starting to see some fundamental support. Perhaps OPEC will do something. Chinese demand has been questionable. The API yesterday announced that they saw a 7.8 million barrel draw in crude stocks. Well, there's another technical support level. Lower supply, higher price. The EIA is expecting a 2.7 million barrel draw today. And if that comes out worse than expected, well, we would expect price to go higher. But quite often with the EIA, the opposite happens initially, but that would give us opportunities to purchase crude at a cheaper level. Where would we be looking for that cheaper level? Well, here we go. We've got settlement right here at 78.20. We've got overnight inventory to the long side. We've got a naked point of control, volume point of control right up here. And then we've got a TPO point of control that exists at the weekly kickoff high, 81.50. We've got to trade gap rules. This is a pretty substantial gap, but we are also looking at the upper extreme of balance that we've been in for 1, 2, 3, 4, 5, 6, 7, 8 days. Upper extreme of balance is up here somewhere. Going to try and stay patient if I'm trading crude oil today, because that EIA release could create an opportunity for us. I'm not certainly going to be holding anything into that. I'm certainly not going to try and respond very quickly to it, because it is likely to be a little bit thin, but it might give me an opportunity, on the response to the EIA. But again, largely in balance the last 8 days. We're getting near the upper extreme. Overnight inventory to the long side, gap rules, number out at 930. It's going to be tough not to look for a trade early today, because we are out of range and out of balance from yesterday's range. But in the longer picture here, still in range and at the upper extreme of that range. Take a look at it here. So low, high, basically overnight, last week's high and low, really kind of enveloping the range for the rest of the sessions that we've had here. So it's going to be an interesting day. There are going to be some good opportunities. Make sure you manage risk well. Opening out of range, short time frame levels that people are going to be looking at are going to be this point of control or weekly kickoff high, which is a TPO point of control, lines up very nicely with that. Then last week's high above that. Lots of price movement available for us today in crude oil. Watch your butt. Watch your ass. Cover your ass. CYA. There's another acronym for us. Alrighty then. Yeah, it was an M top. Going back to look at that crude oil. M. W. We knew we had this head and shoulders up here, and we really reached right down to the measured move from that head and shoulders, and we've been struggling to continue down below that since, with very little success. All right, NASDAQ. All right, so NASDAQ, very similar product, of course, to the S&Ps, but a completely different picture the NASDAQ is painting. We got a little spam coming into the chat here. I do apologize about that. If there was something I could do, I would do it. So again, are we showing medium time frame upside structure? Maybe to some degree, but nowhere near as stark as it is in the S&Ps. As a matter of fact, the S&P I'm calling upside, an upside market state. The NASDAQ I'm calling digestion. I'm calling this range bound, because we're just not continuing or performing as well to the upside as the S&Ps. Remember, looking at markets, we're always thinking about what is the market attempting to do and how good of a job is it doing in moving in that direction. It's not doing that good a job in the NASDAQ as it is in the S&Ps. So we're really in a digestion area here. We are really struggling to hold the lower extreme of that digestion area, which was last week's low, and I think the previous week's low is pretty close to that as well. We're holding below weekly kickoff low, which is largely similar to the reason that the weekly kickoff is in the S&Ps where it is, very similar to the NASDAQ, but struggling to hold that balance. We are spending time now below that weekly kickoff low, which would mark acceptance of lower pricing. We've got that same trend line coming in, but it doesn't come in till here, and the market is on the other side. So I will look for possible support on this trend line. It's only got 1, 2, maybe we could call it 3 points of contact. Not really. But this might be a kind of support area. Remember, up here in the S&Ps, we're right at this convergence. Not so much in the NASDAQ. So painting a completely different story. Yesterday we added 2,200 in open interest on this push to the downside. So we've brought in some new business to the downside. Here's the 30-minute chart. So again, overnight inventory has now been reconciled with this move back to where the market opened last night, right about there, right to it. So we have no overnight inventory, no gap, no special situations, no real reason to be excited about anything too early in the session today. Now that I've said that, of course, the market loves to make a liar out of me, but we're seeing that there's very little change in the perception of value of the NASDAQ index at this time. Be patient. Better trade locations may come later on in the session. Gold. Okay, we're still in rollover. We still have a rollover range going here, don't we? We overall lost 3,500 in open interest yesterday, but 9,500 of that was in the December contract, which actually means in the future months, in the current front month and the future months, we actually added 6,000 in open interest off this low. We've tested all right already to last week's high. Is this correct? No. Pretty close. Here we go. 1, 2, 3, 4, 5. Okay. So we've tested to last week's high. It was a little bit off there. And we still see the market trying to continue to push to the upside. The open interest is, of course, blurry, but it does indicate new longs. We need new business for this market to continue, and we're still working our way through rollover. So we're trading range-bound rules. Range-bound rules, we get to the upper extreme, we sell. We get to the lower extreme, we buy. And as long as that continues to work, we do that ad nauseum until we start taking losses, until there's an acceptance outside of the current area of balance. In that case, we go with it. So right now we are in range-bound control, maybe short time frame control just a little bit. Here's our move. There we go. We had the right spot here on the 30-minute chart for last week's high. Looked above it, broke. Range. Looked above it, broke. Where is our start from the overnight? Right here. We still may be holding some overnight longs. But, of course, the GDP knocked it lower. So, you know, if we didn't catch this move, there's going to be opportunities throughout the day. Don't get too excited. Yesterday, we added that open interest yesterday in a very kind of quiet, sneaky kind of way. I wonder. I want to see what the delta was yesterday here. So, we had negative delta on a market that was really range bound. It would suffice to say that there may be some sneaky longs that have come into this market yesterday. So I'm going to be looking for opportunities to buy weakness. A move back to value high from yesterday looks like a pretty interesting opportunity. At the very least, it allows us to limit risk. To the euro range bound, not really showing the same kind of buoyancy that gold is. We're really central in range. We added 3,300 in open interest to the downside yesterday. Maybe we've trapped a few shorts there. Open interest was higher. Volume was lower yesterday. We're in short time frame control here, ladies and gentlemen. Short time frame levels are likely to hold, but not forever. These are levels that we don't want to marry because they are short time frame levels. Here's the 30-minute chart. Whoops. My bad. Hang on. So overnight inventory still remains a little bit to the long side. The market is continuing to attempt to move to the upside. Really just central range bound. You know, if we're looking for short time frame levels, again, very similar to gold, it traded back down basically to the high of value from yesterday. There's plenty of opportunity for repair above. I could see this market moving to value high from the previous day, maybe even a move back up to a weekly kickoff high. If we continue this, if we start to get nervous in short time frame longs, we could push price all the way back down near settlement, at the very least down near point of control from yesterday. And those are all short time frame levels that do allow us to limit risk. But there's a lot of them, which is the right one. So here's the 10-year. We are in March now. Of course, we should know that. Range bound, rollover, range bound. We lost 178,000 in open interest yesterday, but 173,000 of those were in the December contract. So really overall, we had a 5,000 contract change in open interest in viable contract months. Nothing really to write home about. Here's the 30. Got a nice move off that GDP, but again, still range bound. So my focus is really going to be last week's low, last week's high, to look for reversion trades back to the center of the area of balance. Kind of out in space here. You know, if you find something in short time frame structure to give you an opportunity, yes, go ahead and take it, but I'm going to try and stay patient, look for opportunities in longer time frame important areas today. And let's take a quick look now at the natural gas, which is a bit of a I don't know what to call it. It's very indecisive. We added a couple of thousand in open interest yesterday. Volume was just okay. But the last couple of sessions have been very indecisive, and we're sort of inside the range, the extended trading hour range from yesterday. Certainly inside it from Monday's range. Take a look at the 30. Maybe just awaiting some data tomorrow. In range, in value. No real overnight inventory. Patience. There has been very little change to the perception of value of natural gas. Third day in a row now. What do? Well, we don't have to trade it. Don't have to trade it today. All right. So I'm going to report beautiful girls here as well. Again, it's nothing I can really do much about that, but it is annoying. So I'll make sure and report that as well. So, well, there's our prep for the market today. We'll see what the markets offer us. Make sure you stay patient. If you're looking for trades, you're going to find them. You're going to find them. Make sure you find the ones that find you. Make sure you like the ones that find you. Stay patient, stay centered, stay humble, grateful, and creative today. Take your deep breath with me. Wednesday. Get out there and profit today. Looking forward to seeing you in group coaching. Looking forward to seeing you at Make Hogue Money, and looking forward to a much more successful recap than yesterday. Hey, have a great trading day. Trade well, and get out there and profit. I'll see you in the proverbial trading pit here in just a few minutes. Have a great day.